Hi, greetings to all our esteemed viewers, and just a quick take on the market and what a roller coaster year it was 2016-2017. Expect the unexpected, and that is what the mantra was for the entire year. There were many events which came which nobody was looking forward to. But all the events were taken in the stride by the markets, and markets continued to rally on strength. All the weaknesses were continuously and consistently bought into. Just to give you a brief perspective, story in charts to talk about. Feb 2016 was the day the budget was presented in the parliament, and the Nifty index made a low of around 6,800. Thereabout, after the budget was being presented and RBI policy was done, the market continued to gather strength, and the market was cruising smoothly on the uptrend, when again in the month of June an event happened, and that was the Brexit event. So the year started on 1st of April 2016 at around 7,700 on Nifty. From there the market was cruising around 8,300 when the Brexit event happened, and the market cracked down to around 7,900. But this entire event was absorbed in a couple of trading sessions, and then again the firmness came back, and the bulls were again buying spree. The value and the quality stocks were picked into the market, and the Nifty index started running up. In the month of August, the Rajya Sabha passed the much sought after GST bill, which was a very good positive trigger for the market, and the momentum continued till we were cruising along 8,900 on Nifty smoothly, when next event happened which nobody was even dreamt of. That was the surgical strike, when Indian Army went into the Pakistan and raided the terrorist camp. The impact of that was a big correction which again happened in the market. Around 300-400 points on the Nifty was lost in a matter of a day. From 8,800, 8,900 to 8,550, 8,500 was the correction which happened in the market. And market seemed to be stabilizing around there. So the entire month of October, the festival season, the market continued to stabilize around 8,500 kind of June. And when things were looking good, the mood was upbeat, monsoons were very good, and things were looking quite rosier on the earnings front as well. Expectations were building up, when suddenly on 8th of November the next big event happened which nobody has expected, and it was a demonetization which was announced post the trading hours on 8th of November. So what happened in demonetization was the currency notes in the denomination of 1,000 and 500 was abolished overnight, and that has to be deposited into banks to get a new currency note of 500 and 2,000 series. So this impacted the entire cash market economy, because a lot of economic activity happens in India in the cash transaction, and to stop that, this move was made by the government. Market did not take it lightly. The entire analyst community, the business community, everybody was at a loss to figure out what kind of an impact this will create. So this translated into again a selling spree in the market, which was cascading as the days rolled by. Eventually on December 26th, the low of the Nifty was made at around 7,893 kind of levels. As December passed by, the feeling about demonetization also faded away, and the ground level reality check did suggest that things were returning back to normalcy. So obvious behavior of the market was to again get into the buying mode, and quality stocks and quality themes were being picked into, because this time the budget was also preponed. Rather than in the month of March, it was preponed to 1st of February, the date on which the budget was to be presented in the parliament. And from 7,900 levels of December, the market was around 8,400-8,500 levels when the budget was presented. But the market behavior was totally different. Market was consistently moving on the up move. Budget itself became a known event, as none of these measures which market was expecting with the financial market was announced in the budget. It was more of a roadmap kind of a budget, rather than detailing into the nitty-gritties of how revenues will be collected or expenditures will be made. Good part about the budget was the announcement that expenditure is will be rising about 9 to 10%, whereas there was no change in the tax structure. it remained the same, and this speaks about government's mathematics, where they expect the tax to grow organically without having any hike in the tax structure because of the demonetization. I will come to that, how that is reflected in the third quarter's GDP number itself, because if you look at the third quarter GDP number, the GBA was 6.6%, whereas the GDP was 7%, so a difference of 40 basis points primarily on account of the taxes which were being collected by the government. So the tax base has already been increased through the demonetization impact, and it is likely to remain so, because more and more participants, I mean the business participants, will now be paying taxes because of the impact the government has created in their minds to be honest and sleep well at night by paying taxes. So that was a good part of the budget. Infra spending, rural spending, housing, low cost housing finance, so as well as Manrega limits being increased. These were the key highlights. If you sum it up, it was more of a budget which spoke about inclusive growth, which spoke about the how the entire country can grow in a cohesive manner and in an inclusive manner, and the government was very hopeful and expects the tax base to increase substantially, and that is the reason why the fiscal deficit targets remain very benign for FY18 and 19. There was no large jump in spite of expenditure getting increased by 9%. So market took this entire theme and the entire intention of the government positively, and it rallied from there further towards 9,000 mark. And the weight was more of UP elections, the state elections, which was lined up for the month of February, because this election was seen by all the participants, be it domestic, institutional, HNI, or the foreign community, as a mandate to the government of the impacts of demonetization. So it was seen that if government is going to lose UP election, the biggest state election which was underway, then the people were not on the side of the government, and the demonetization impact has hurt them badly. But again, expect the unexpected. It was a euphoric victory of the BJP in the Uttar Pradesh state, and this euphoric victory, almost plus 300 kind of a seats, where expectation, or if you look at the poll exits, where all over the places from 180, 160 to 240 kind of a level. So nobody expected it to cross 300. So a landmark victory, a landmark mandate was given to the government, and again the people's faith in Mr. Modi and his government was restored, re-established, and this had an impact the next very day when the market opened up. It opened gap up and an all-time high of 9100 plus. And this was not lost, because eventually post UP elections we made a high above 9200 on Nifty. Still we are trading around 9100 kind of a level, 9000, 9100 as we speak. The markets going forward in FY18, that is the next financial year, beginning from 1st of April 2017 till 31st of March 2018. And why we see the market so in order to explain that, we will come to the next slide. Next slide is the FII flows, which you see on the screen. So till September, FII flows were positive last year, and that was the reason was you saw the market rallying from 7700 kind of a level to 8800 kind of a level. Post that, after the surgical strike, when FIIs got tentative on the market, they were consistent sellers in the month of October, November, December, and to an extent in the month of January as well. But 3 months of huge selling, around 35,000 crores of selling was done in October, November, and December put together. The market cracked from 900 kind of a level to 7900 lows of December. So this is what FII liquidity getting drained out does to the market. But see again what happens in the month of Feb. They have come back as a bias into the market, and they have been consistently buying in the month of March as well. So because of this backdrop of the liquidity flow, now in the liquidity scenario is such that DIIs are buying the market, FIIs are buying the market, HNIs are participative in the market, and retail is buying the quality stocks into the market. So all this liquidity has pushed the market to 9,000 plus kind of a level, and it will remain so. The next big question is whether the fundamentals justify current valuation. So most of you must be arguing that at 9,000 plus kind of a level, the Nifty is trading at around 23, 24 kind of a PE multiple, which is expensive. But this is not the case. See, don't look at 2008. 2008, 7, 8 was a scenario where we were rallying for the last 4, 5 years. From 2003 to 2007, a consistent growth of earnings was seen of 25 to 20%. And on that backdrop, when we entered 2008 January, the expectation was the earnings will take a forward leap to 30% kind of a growth. So there was a euphoria in the market, and it got extended. The exaggeration was done, and then you have the subprime crisis hitting the US. So all culminated to give a big correction into the market. Come to this period from 2014 till now. What happened in 2013 to 14? There was 11% jump in the earnings of SENSEX, which you can see in the present chart. And because of that, and Mr. Modi, coming to power in the month of May, the market gave a thumbs up. The underlying, perception was that earnings have started picking up. Now our government is there into the center with majority, and Mr. Modi is there. So everything should work well for the market, and we made a high of 9100 on Nifty. But post that, when the government's intention of inclusive growth was known to the market, corporate earnings did not pick up. So the next 3-4 years which you see is SENSEX EPS hovering in 1300, 2050 kind of a zone without any growth into the earnings. There were two reasons. One was the government policies which were inclusive in nature, and they were revamping all the power sector reforms, banking reforms, land reforms, forest reforms. These all were happening parallelly. So this had a dent on the earnings of PSU banks. Because of the banking reforms, all the PSU earnings were wiped out because of the provisioning for NPAs, which may not have been NPA actually as per rules, but due to AQR they were providing for that. There was a overall downward metal cycle going through the globe that had the impact on the metal earnings. Then the crude prices have fallen from $90, $100 to 30, 40 kind of a dollar. So all oil companies were hit by the crude prices for the likes of ONGC and all. And because of a general slowdown in the economy, the consumption space like HOL, ITC was also not faring well. There was deceleration in the earnings growth. Larsen and the infra space was recording a decelerated earning growth. IT was losing their growth trajectory in the US. There was deceleration there. Only pharma was doing well. Autos to an extent were doing well. And because of the input prices being low, autos were the natural beneficiary of the lower commodity prices. So that continued to do well. So that was the reason why you see the SENSEX earnings, rather than registering a degrowth, it was stagnant around 1300, 2040 kind of levels. So 4 years have passed where you don't have a headline earnings growth in the Nifty or SENSEX, and now we are on the verge where this can turn around. We will go to the next slide where I can show you that how this turnaround can materialize. But the mid cap and small cap basket was budging, and there was a reason to that. They were delivering earnings. So company specific activity, consumption specific activity was happening, but the headline sectors which used to deliver to the earnings, like banking space for public sector banks, were all hitting on lows because of the provisioning and the sector specific trajectory. Now we believe that all these aspects are being sorted out. All this has reversed. Metal prices you have already seen is on the upward trajectory. Last quarter earnings, if you look at the banking space, especially the public sector banks, the stress in the asset has been lowered. They have started reporting profits. So from loss to profit, the trajectory is happening. Infra, government has announced very big spending on the infra, around 4 lakh crores kind of a rupee. So that will help infra companies as well. Cement companies are doing well. At the same time, auto ancillary will pick up because the monsoons have been good. So the auto and auto ancillary pack is likely to do well on account of good per capita income of the citizens of the country, because the monsoons, as I spoke about right now, have been very good. 7th pay commission has been in place, and private sector is going to have a good increments this time around, because expectation from the general economy is that it is likely to do well on background of the various policies being implemented. So now what we are looking at, the earnings trajectory is like for FY18 we are expecting around 24% kind of an EPS growth, and for FY19 we are expecting around 22% kind of an EPS growth on SENSEX. So the reasons are very obvious, because most of the public sector banks will start reporting profits. The general private sector banks will show growth in the business trajectory. At the same time, the normal cyclicals like infra, capital goods, metals, materials, auto ancillary, these all sectors will will be firing all cylinders on account of consumption getting elevated. The two factors which we now have to look forward is, one is the monsoons for this current year, that is in the year 2017, how it is going to pan out. Till now the reports have been normal, and even if it is a normal monsoon, then we can expect a good kind of earnings trajectory been picking up in the financial year FY18. At the same time, the fourth quarter earnings would be very meaningful to build again the faith into the system, and this was demonstrated very well in the Q3 FY17 earnings, because the expectation was that the earnings of the Q3 FY17 will be very bad. And if you look at the earnings trajectory of SENSEX, it delivered around 1% kind of Q3 FY17 earnings. But if you come down to Nifty in the next slide, the earnings growth was phenomenal. It was over 10%. And if you come down to our universe in this present slide, look at the PAT growth. The PAT growth was around 22%. So MOSL as a house, we cover over 220 to 30 stocks. So as the basket was getting bigger, as the basket was getting extended, the earnings were coming sharp and high. So this is on the backdrop of a quarter where everybody expected that the earnings will fall down drastically. So we all were expecting a negative kind of earnings trajectory in Q3, but on all the three parameters, be it SENSEX, which is a 30 company index, delivered a 1% kind of a PAT growth. Nifty delivered around over 10%, 10.5% kind of a profitability growth, and Nifty profitability growth trajectory has been inching up. Q2 was also good. Q3 has been better in spite of demonetization being happening. And the larger basket, where all the mid cap and small cap companies are there, they delivered a phenomenal for 220, 230 companies which we tracked. They delivered about 22% kind of a profitability growth. So we believe that our judgment or our estimates for FY18 and 19 earnings will likely play out. They will play out they can play out even better than what we are expecting. We are expecting a very conservative numbers. And the reasons will be banks delivering very good set of number on retail credit growth story. At the same time, because of the infra spending by the government and the general push in the economy, farmers are being more richer now. And if the monsoons pan out again in a normal way, so they would be again spending and splurging more. So that will drive the entire auto ancillary in the consumption themes, which will be driving the market forward. IT will remain lackluster. I don't think there will be much impact on the IT space. Pharma will remain tentative, but oil and gas will now stabilize because the base is lower as compared to the last year. So those all sectors will be where they are. So extrapolating this into the earnings of Nifty, say around 400 is the earnings we are likely to end for FY17 in Nifty. 25% kind of a growth on that translates into a FY18 EPS of Nifty of around 500, and 22% thereafter will translate into an EPS growth of around 610 or 20 on Nifty for FY19. So by the time we are ending FY18, we would be looking forward to FY19 earnings of Nifty, which will be 600 plus. So even if you discount that to the long-term averages, as of now at 9,000 levels also, our market is trading at 1 year forward earnings multiple of around 18 on Nifty and SENSEX. So if you are ending FY18 at around 500 kind of a Nifty EPS and you are expecting 600 plus kind of an EPS for FY19, discounting at the same multiple of 18 gives you a Nifty target of 10,800. So at 18 kind of a PE multiple 1 year forward, by the time we end FY18, the Nifty target would be 10,800. What we expect is Nifty will likely and in all possibility cross 10,000 this year itself in the calendar year, provided there is no hiccup in the monsoon or something untoward happens like it happened last year. So given the present scenario, given the way the things are rolling out, given the liquidity flows into the market, given the fact that GDP has been resilient, demonetization is now through, and the entire cash levels are out. There is no any barriers out there, and the government policies are rolling thick and fast. GST is likely to be implemented by 1st of July, and the budget has been very conducive and beneficial for all, to put it, for the economy. So global headwinds are not there. In fact, they are tailwinds for our country. Currency has been appreciating. Commodity prices are still not a level where you can fear about impacting the inflation in a big way. Agri prices are soft because of a good agricultural produce. We don't have a food inflation coming into the play, and crude prices are benign, the biggest fear of our country. So that around $45 to $50. We expect it to remain in the same range for this financial year as well. And so, to sum it, on a very conservative basis, we see Nifty hitting 10,000 in this financial year, FY18 itself. It can even go higher to that, and fundamentals do justify around 20-22% kind of a CAGR in the earnings of Nifty and SENSEX for next 2 years. So stick to the QGLP philosophy, that is quality, growth, longevity and price. Stick to quality stocks, stick to cyclical sectors, buy quality stocks, be patient, be an investor. Happy times are ahead. So thank you so much. Happy investing.